Assalamu alaikum. Today our topic is capital market. As you know, we discussed the money market, types of the money market, nature of the money market, and the instruments which was used in the money market. I hope you will completely understand the money market. So today we will discuss the capital market. So capital market is that market where buyer and seller engage in the trade of financial securities like bonds and stock. The buying and selling is undertaken by participants such as individuals and institutions. So that long-term security market is called capital market. This was the simple definition of the capital market. Another definition of capital market is that a market where buying and selling of those securities are done whose life is more than 1 year. So we can define it that a market where the long-term securities are trading, such market is called capital market. In the money market, keep in mind that short-term securities are trading whose life time was up to 1 year or less than 1 year. But in capital market, those securities whose lifetime is more than 1 year or whose lifetime is long, so that are trading. That market is called capital market. Another one definition of the capital market, that the market where investment instruments like bonds, equities and mortgage are trading is known as capital market. So you know that bonds mostly have long-term maturities, equities also have long-term maturities, and mortgage are also long-term loans. So such a market, that is called what? That is called capital market. Capital markets helps to channelize or transfer the surplus funds from savers to institutions, which then invest them into productive use. So generally this market trade mostly in the long-term securities. Capital market consists of primary market and secondary markets. In primary market deals with the trade of newly issued of the stocks and other securities, where the secondary market deals with the exchange of existing or previously issued securities. Another important divisions in the capital market is made on the basis of the nature of the securities that are trading, like stock markets and bond markets. While here the lifetime of all these securities that are lengthy. So on the basis of that, such a market, that is called words, that is called capital market. Look at, dear students, capital markets are the market or venues where savings and investments are channelized, are transfers between the suppliers who have capitals Supplier means savers here, who have a capitals, and those who are in need of those capitals. So the investment or transfer from savers or supplier, means supply of, who make the supply of the capitals of the funds, to whom? To those who need of it. So the entities that have capital include retails and institutional investors, while those who seek capitals are business, governments and people as well as. It means that supplier and the receivers of the funds. So capital markets seeks to improve the transactional efficiencies. These markets bring those who hold the capitals and those who seeking capital, they are bringing together and provide a place where entities can exchange security, where both the parties can exchange their securities. And that market is called stock markets or bond market. So capital markets consist of, as I discussed, that on the primary markets and secondary markets. Look at primary market is that market where for the first time are newly issued securities that are trading. So those securities whose lifetime is lengthy, more than 1 year, when newly that are issued, so that market is called primary markets. And secondary market is that market where already issued securities are trading. So our capital market will be primary as well as will be secondary. The most common capital markets are the stock markets and or the bond markets. For the further explanations of the capital markets, you need to study your book. So I am going to give you a little bit extra information regarding to the capital markets. So the terms capital markets broadly defines the place where various entities trade the different financial instruments, and these venues may include the stock markets and the bond markets and the currency as well as the foreign exchange markets. Most of markets are concentrated in major financial centers, like we have huge stock markets like New York stock market, London stock markets, Singapore stock market or stock exchange, and Hong Kong stock exchange. So these are instruments, huge number of the capital instruments are trading in these capital markets. As you know, students, that capital markets are composed of the suppliers and the users of the funds. Suppliers includes household and the institutions servings in the capital markets. Like look at, if I have the savers, I have surplus money, so I can also buy the stock. And similarly, the institutions, the financial institution like banks, like mutual funds, like other financial institutions, they also make investments. They also buy and sells the stock in the stock markets. So those who buy these long-term securities and give funds, so these are called suppliers. So suppliers may be in individuals or may be institutions. And similarly, charitable foundations and non-financial companies, mostly they are buying these stocks. So these are also comes in the supplier category. After that, they generate cash beyond their needs for the investments. Users of the funds on another side, one is suppliers of the funds and another is users of the fund. So users of the funds include home, clear, non-financial assets or non-financial companies and government financing infrastructures, investments in all these individuals, companies, so these are words, these companies, these institutions, these are the user of the funds. They uses those funds, they issued the long-term securities, and in this way they are generating funds or finance. So capital markets are used to sell financial products such as equities and debt securities. Look at it consists of two nature of securities: equity securities and debt security. Equity securities are equity stocks, so in which ownership rights are given. It means that investors have ownership shares or rights in a company, and in the debt securities ownership rights are not given. They are just only interest bearing securities like bonds. So that's why the capital markets, they now give an options to investors. Some investors, if they just only wants the fixed returns, so they can make investment in the debt securities. And those investors who want to take part in the ownership rights in a company, so they can make investments in the equity security of that markets. Next one topic is nature of the capital market. So the nature of the capital markets, that is brought out by the following facts. Like the money markets, dear students, capital market is also have very important role, and they also have some proper nature. It plays a significant role in the national economy. So a developed capital markets immensely or at a huge level contribute for the speedy economic growth and developments. So let's see now First one, nature of the capital market, that it has two major segments: long-term debts and equity. Long-term debts and equity means that if someone or investors, this market provides them some options. If persons or investors, they have a huge surplus, so they can make investments in the debts as well as in the securities. It means that capital market is the mobilization of savings. How? Look at capital markets, they have an important source for mobilizing the idle savings from the economy. It's mobilize funds from the pupils and for the further investments in the productive channels of the economy. So in that sense, it activates the idle monetary resources and puts them into proper investments in the shape of to offering debts or to offering equity options to investors. So it deals in the long-term securities. This is another one nature of the capital market, that the capital market will be that market where a long-term security will be traded. If short-term securities will be traded, so that market will not be called a capital market. Like look at, if we issued the 3 months maturity securities, 6 months, and up to 1 year. So that securities, those securities which are trading in such a market, that market will not be called a capital market. Keep in mind, in the capital market, the long-term securities will be trading. The buying and selling of the long-term security will be taken place. Third one, it helps in the capital formations. So capital market helps in the capital formations. Capital formation is the net additions to the existing stock of capital in the economy. Through mobilization of the ideal resources, dear students, the capital market generates savings. The mobilized savings are made available to the various segments or to the various sectors like agriculture, industry, etc. So this helps in increasing the capital formations, and in this way more and more capitals will be formatted. It helps in creating liquidity. Capital markets helps in creating liquidity means that any time if an investors want to sold out their securities, so they doesn't mean that they can wait for the maturity of that security. Before the maturity, they can sold out those securities in the secondary markets. So if any time is those securities are too much liquid, so any time if The investor want to sold out it, so they can easily sold out such a securities. So that's why this is the nature of the capital markets, that capital markets can provide the liquidity to all type of the security which are trading. Another one, nature of the capital markets, that is provision of the investments avenue. So provisions of investments avenue, that capital market raise resources for the longer period of time, so that thus it provides in investments for the pupils who wish to invest resources for the long period of time. It also provides suitable interest rate returns to investors. Instruments are, we can say that securities such as bonds, equities, units of the mutual funds, insurance policies, etc., definitely provides diverse investments avenue to the public or to the investors. Like if being an investor, you want to make investments in bonds, and in bonds also different maturity bonds are available in the capital markets, the short-term securities bonds, the medium term securities bonds, and the long-term securities bond. Similarly, the options in the stock is also available, common stock, preferred stock, and similarly the insurance policies. So the long-term policies, the short-term policy, and the medium-term insurance policies options that are available. Another, the nature of the capital markets, that it enhances productions and productivity in the national economy, as it makes the funds available for the long period of time. So the financial requirements of the business house are met by the capital markets. It helps in the research and development as well as, which helps in increasing the productions and productivity in the economy by generations of employment and developments of the infrastructures. So in this way, the economy of the country is going to the growth side. So these were the nature of the capital markets, and I hope that you will understand the concepts of the capital markets, that what is capital markets, which type of the securities that are tradings, and the funds that are generating through by the capital market securities. So that funds is used by businesses or by institutions in the capital budgeting projects, like they are use that money in by purchasing of machinery, by use that money in the research and development, by using that that funds in the long terms projects of the business. While the money markets funds when that is generated by businesses, so they use in the short terms projects, in the short terms business activities, like for the working capital, they use as a working capital. But the funds which is generated through by the capital market, so they are using as a capital budgetings. Clear? So in the next class we will discuss the capital market securities in details, that the security which took place in the capital markets. So we will discuss one by one.